presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 3:07 p.m. Eastern Time, and we got markets challenging the session lows right now. You have the S&Ps. We kick off the session already in higher territory with NVIDIA pushing this market higher. NVIDIA, they're going to resuming selling their H20 chips. We're probably just under that number. Yeah, 4.15 trillion, 4.15. Quite an escalation. Pull back a bit. Still, you're talking about a company with about 25 billion shares outstanding. You're up by more than $6. That's 150 billion market cap. We were just coming in right at about 4 trillion last night, 4.15. And yeah, to jump over to that headline, NVIDIA, AMD, resume AI chip sales to China in a U.S. reversal. And yeah, they're going to begin selling the H20 AI accelerator to China. So that boosts that equity, and that's going to be billions of dollars is the number out there. We jump over to AMD. We're up 5.7% right now for AMD. Now, as I mentioned, these are some of the biggest companies out there. Okay, NVIDIA is 4.2 trillion. The S&P is a weighted, market cap weighted index, man. Apple is up a full percentage point, right? Amazon up 0.25% right now. Microsoft up 0.8%. Google up by 1.0%. Other equities like Oracle up 2.2%. Dell is in the green as well. And you have the S&P's negative. You get the Dow getting clobbered on some earnings as well. But right now we get the NASDAQ 100 up by 70 points. But yeah, you were as high as 23,222, and we're coming right into those lows. We made it at 11 a.m. We were back there 2 hours ago at 1 in the afternoon, and we are challenging those lows again in the NASDAQ 100. And look how we just came down there. That's some volume. You did it on some volume last time of about 8,100 contracts. That's on a 5-minute. Let's put it on a 15. See how we're trading at some of those lows. Yeah, doing about 14,000 contracts, and we just ripped lower on 13,000. It's going to be an interesting 50 minutes as we wrap up. Now, yields in focus, man. You talk about a move, right? Oof. We'll go over some of the inflation data, and let's go for it right now. Why not? All right. Now, core CPI is what drove the move originally, okay? Core CPI on a month-over-month basis comes in light at 0.2%. There it is right here. Versus 0.3% expected. But they always round these. You should really carry it out 2, if not 3 decimal points to give you an idea of how much they missed, right? 12-month for core comes in at 2.9, which is what was expected, but that number's actually going up, is that number. Okay? Now, going through this whole Bloomberg update that they do, and they do a great live feed for about an hour. They break down everything in the CPI, every little facet that they can. They get some takes in there as well. But let me give you, okay, and just check out this part, okay? And these were, you have overall CPI rising 0.3% as expected. Year over year, you're at 2.7% right now for overall CPI, up from 2.4% in May. Okay, again, you're at 2.7, up from 2.4% in May. Higher food and energy prices help drive some of that. If you strip out autos, core goods prices are up almost 0.6% on the month, the most since November of 2020. Yeah, 2021. Again, if you take out autos, okay, because autos were going down. Core goods prices are up 0.6%, 0.55 to be exact, but that rounds up to 0.6%. Now, you make with this data what you want, but the market right now is reacting and saying, we're pulling some cuts out. Yields are up. The 10-year's at 4.5%. And I'm giving you some of the reasons why that could be permeating, okay? And again, you take out autos, core goods prices up almost 0.6%, the most since 2021. Toy prices up 1.8% on the month, the biggest gain since April 2021. And this is all stuff I got from Bloomberg on the feed, but I was just putting it together for the Gold Report actually today. If you want to check that out, folks, a new issue out today. Food at home was up 0.3% on the month, 2.4% on the year. Energy costs, right? 0.9%. The most since January. Gas up a full percentage point for the month, the most since January. Furnishings, okay, furniture up 1% on the month, the biggest gain since January of 2022. There's some numbers in there. Now, where we go from there, September's in focus. We're going to get a lot more data by the time we get to September. But boy, this market is screaming lower price and higher yield right now. And that's given the dollar a bounce, and we get the 10-year at 4.5%. We'll call it, with the dollar at 98.62. Now, what's remarkable here is July 1st, we were at 96.38. The 10-year was at 4.19. 4.19 is what we hit there. Okay, you back that up, and that's when we spiked. You can put it on a 10-day, 30-minute. 112.12. We're 2 full points below there in 2 weeks, and you just went from 4.19 to 4.5%. We're almost at 4.5. So there is a move in this market, man. Now, you could say that when we were approaching 4.2, the market was ripe for a little bit of a pullback, but boy, this is just going right back to the bottom of the range, it looks like. And that's somewhere between 109.26 and 109.12. And yeah, that's going to make the data as we go forward even more important, because if some of those numbers begin to permeate further into that data, we'll see how the Fed responds. And right now, the market's pricing in that they're not going to be cutting later this month, that's for sure. And the odds are shifting ever so slightly when you're talking about September. To pull those numbers over for the September meeting, it's almost a 50-50 right now. It was about a 60-40 before that data, and right now the market's pricing in that we get a cut 52%, we stay where we are 46% in September. You go into December, and the market's pricing in maybe 2 cuts at 42%, maybe just 1 cut. And you know what? There's an 8% chance we get no cuts, and we know how quickly these numbers can move, right? If there's an 8% chance on July 15th we get no cuts, well, boy, you're talking about 5 months into the future. That is a distinct possibility. I don't know how it plays out, because there's pressure on the Fed, and you're going to get a new chairman, chairwoman next year. But right now, this market's streaming higher yields. And the dollar's reacting with some strength to 98.64. And yeah, Bitcoin trading lower. Bitcoin off $2,800, off 2.7%, as we got the S&Ps off by 14. NVIDIA, all-time highs. All those markets, S&P and NASDAQ, make all-time highs today before we got a little pullback. Folks, we're coming back with our man Basil Chapman. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
My mic is muted. My mic is muted.
I apologize, folks. Apologize for that, Basil. I could hear you as well. I was talking there, and some reason my mic was still muted. Folks, we're going to jump over to our man, Basil Chapman, right on the front page of TFNN. Apologies. You'll see the opening call there. You can sign up for a month for $149, folks. It comes with a 30-day money-back guarantee. Basil has some great calls recently, and we're going to hear about them right now and talk to our man, Basil. Check out this market. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic, man. We got all-time highs today in the market. Basil, Nvidia's on fire. Quite a market, to say the least. And we have a little volatility today as well. How about yourself?
So let me just go through something here. In the Dow, in the Chapman wave, we're always looking for at least 4 higher peaks where we start to look for some kind of a turn down. It can go to an E, an F, or a G. I also have something that I call a peak C1, C2, meaning that it just missed making the D, but some of the technicals that are important are suggesting that there could be a pullback. So in the Dow, look at this chart. This is the Dow, the daily. The high that was made right here on the 3rd, and the high that was made a little bit lower on the 10th suggested to me that the technicals were starting to slip a little bit at the same time as there was a chance we could make that pattern that I call the dreaded H. Simply put, the dreaded H is where you go from, you come sharply lower, you try to rally, you fail, and it arches over, and it takes out the left side low. Look how deep this move is so far, down 335, but that's the Dow.
Yeah.
So a couple of things that I wanted to just show you is that this is a chart that I show subscribers every once in a while, and I show here in my Tiger Technicians Hour. This is a very simple chart. Actually, it looks a little more complicated than usual because I wanted to show that I also had a time sequence to this low right here, meaning that I was looking for the number of bars on the left to the number of bars on the right to see whether or not we can break to an all-time high. If we didn't, I'd be looking at what I call internal highs and residual highs, or internal lows and residual lows. Basically, that is, it's like an earthquake where there's an aftershock. Sometimes the aftershock is nothing. Sometimes it's about the same. Sometimes it's even greater than the earthquake. So I call that internal high and residual high, which we've done, and we've taken out the left side low. That just says to me, that's a warning. But there are a couple of things. This is the Dow chart. I only do this. It's called the Chapman Wave Dark News Index, and I only use the Dow for this. So that just says on that one indicator, which is only 30 stocks, but they're very important stocks, we're starting to see some slippage. However, when you look at the weekly chart, there's this potential for a double top in the 45,000 area that turned into a triple top because we just missed 45,000 in the weekly chart PD. Then last week I was saying to you, look how powerful the S&P is, SPX, there we go, how the let me just get this chart right here. There it is. Look how powerful this weekly chart is. It's only in a leg C at an all-time high. The QQQ, the index 100, is only in a leg B in the weekly chart. The SMHs, this is amazing. The SMHs only in a leg B, way above the previous high, 269. Went to the long-term high, which is 283.97. We went to 293.20 today. So this says to me, if there is any turn down, and I'll go back to this chart here, it means that within the context of your dark news index, you've got everything in place, but you don't have the news that is permeating the market negatively. But there are certain factors, and that's the usual thing that I look at in this particular internal high and residual high. So what would they be? Well, one is tariffs. We don't know about tariffs, but we do know that the semis had a bit of a break last night, so they had all-time highs. But this is something that does concern me, and you spoke about a little earlier. This is the TBT, and that is the yields. Look, the TBT, for this first time, is having some really powerful moves to the upside. It hasn't broken out. But look, the MACD, the 9-period moving average went positive. The MACD turned positive. The stochastics at 76%, close to 8%. So that's one area. So there are a couple of areas that are saying to me, until you get everything in unison and you don't just get one sell-off, but you start to get a sustained move to the downside, you're only going to get that if there is this backdrop, a dark cloud that says, uh-oh, now the market is worried about this particular thing. At this point, it's something to be wary of. So we have started a short position, but here's the other thing that we're looking at. You mentioned, look, Microsoft. We actually own Microsoft from 338. We got a little left, and it's there at an all-time high. It hit 506.78. We actually also own GE from 198 area, and here it is, all-time high, 265.06. The Bitcoin, you mentioned Bitcoin just a moment ago. Look, Bitcoin, I always look at that peak D. That's where other things can happen. Well, we hit 123,650. We are still long. We have the iBit, which is the iShares, and it's pulled back quite sharply. If Bitcoin breaks 112,500 support, that's going to be a problem. Right now, it looks like it's just digesting. So as I go through all these different areas, I don't have a specific. Yeah, you can see that when I show you the charts. They're all doing slightly different things. And the IYM, the Russell 2000, is lagging some. So I've been very specific. We've taken little bits off, especially with the stocks that are reaching all-time highs. And mostly, we have other areas that we're looking at that have done quite nicely. So I'll see tomorrow about Bank of America, because I believe earnings come out tomorrow. There's your peak D at 49.31, just off the all-time high. So we'll see if that's going to pull back. It's down 72 cents right now. So I've become quite cautious for the very first time. I'm looking at this. I'm saying even stocks that were real laggards and had fabulous moves, like a Disney. I mean, Disney goes from the 80 level to 104.69 on the 30th of June at a peak D. W is one that I've been talking about for some time, coming back very strongly. This is Wayfair. I mean, the monthly still looks horrible. The weekly looks like it's improved, but here it is at peak D and a sharp move down. So I'm kind of cautious right here, but I don't have that kind of selling that says, aha, now you've got a major turn down. So there could be a rotational aspect to this, because you saw the semis are at all-time high. Semis right now just off the all-time high, 293.20, but it's at a D. So I'm watching these, and what's fascinating to me is that we have some stocks, very low-price stocks. For instance, last week I was about to talk to you about BBAI, which is Big Bear AI. This is a technology company specializing in national security, and we had got it in the $5.09 area, and it spiked up to $8.72. A really nice gain. We took about a 50-something% gain. It's pulled back, but look, it's kind of holding quite well here. So I'm saying this is very special, and unless we start to see some serious sell-off with the VIX, which is trading at 17, start to get to the 20s, we might just see this as a rotational correction. But I'm kind of cautious, and we have started a short position.
Those are some great trades, Basil. Going through Microsoft, man, amazing. BBAI. Basil, thanks so much. We look forward to the program tomorrow. Have a great night.
Thank you, Tommy. You too.
We'll be right back, folks.
Is on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome Welcome back, folks. We got the NASDAQ 100 in the green, but all the other markets in the red right now. You got the S&P off by 15 points, and you see right down at the lows we were at about 1 o'clock as well. We're trading off 15 points at 62.95. NASDAQ 100 up by 57 points. But, yeah, we just dipped below for lows as well. All right, right now, folks, we're going to jump over to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 3:30, folks. You can reach Tim at his website, ord-oracle.com, every trading day. And you can also check out under the services tab right at TFNN.com. A couple great webinars. The 6 secret ratios every trader should know. Tim references some of these when we talk. That's SPY VIX on there. And the secret science and market tops. Check out those webinars as well. Tim Ord, good afternoon.
Good afternoon. Good afternoon. So got some kind of, so far there are minor divergences going on. And we were long from June 25th, and we got out yesterday. Not a huge sign here, but we got some divergence in the first chart. This is the SPY. Bottom window is the VIX. Top window is the SPX VIX ratio. Let me get a drawing to here. But anyhow, when the SP goes up, the VIX is supposed to go down. And when the SP goes down, the VIX is supposed to go up. So anyhow, if you look at the bottom window here, since I think this goes back to there's a 10th, so this would be last Friday, I guess last Friday's trading to today's trading. The S&Ps, we did back off, but from wherever that low was, which is probably Friday, the market kind of made higher highs, higher lows on the SPYs. If you notice the VIX, which is also trading with the SPYs, is making higher highs, higher lows too. And that's a divergence. You know, we hit a new high today, and the VIX did not even come close to hitting a new short-term low. So we're at minimum going sideways here, but the uptrend's probably done, at least for now. How much done, I don't know. But especially if you break a new high and you can't hold it, day's not over yet. We've got a half hour to go, but most likely, this is what they call an up thrust. If you can't hold up above the previous high, they'll try to take out the previous low. Well, the previous low on this case is just July 8th low, which is not very far from where we are, which, I don't know, 620 or approximately 620 range in that vicinity. So that'd be a minimum downside target. So that's this 39-minute VIC or 39-minute chart. So it's just a divergence. I thought I took it off. There's another reason why, because seasonality is actually turning bearish here this week, and seasonality can vary from several days before and several days after. I don't know. We're running into seasonality that's going to be bearish, or it's very bearish right now. We're into a period that seasonality is not good, so that's the reason why I kind of took it off. We flipped the chart too. I always like to have two different indicators kind of giving me the same signal, ideally. And this is the SPX VIX ratio, and I think this is a daily chart. I'm pretty sure it's a daily. Yeah, it is a daily chart. But I do this ratio, so this is the equity market against the gold market. And I use it several different ways. If it goes one direction too fast, it usually halts either the direction. If you're going up, it usually halts the decline or halts the advance. If it's going down too fast, it halts the decline. And I kind of, in this case, I just marked the times when the RSI got above 70, and this goes back to, looks like about a year or so. And all those lines across the chart are times when the RSI got above 70. We're currently around 71 right now, or 77 right now. So even though this indicator really zoomed up, which is actually kind of a bullish situation, it zoomed up too fast. And so it needs to get back to around 50 before really giving a great signal. But it does show a short-term exhaustion to the upside. And it does pretty well picking out short-term highs. There's one. This is back in May. Looked like about a 2-week decline. This is, I don't know, a week or two. And anyhow, in general, it'll pick out, approximately a week, sometimes longer. Sometimes they come at significant highs. So anyhow, I'm thinking the upside for the SPY, because of the VIX and the SPX tilt ratio both hit extremes. The market's at best is going to flip sideways here. Will it turn into a top? I think it will. Maybe not this week, but maybe next week or something. I think it'll at least flip sideways here. So why take the chance and see if it works or not? I'm thinking I'll just take it out. And there's enough information here to say, do you want to short? No, I don't think so, because I don't think the downside's really anything here yet. But I had another chart here that I was going to show you where the downside was, and what I did was put two of the same charts in here, so I don't have it here. But what I'm thinking is going to happen here is we're at least going to go back down, probably to the breakout area, and probably find support and try to go up again. But if you notice, from April low up to the July high, we went virtually straight up, and we need time to build cause for the next rally. So I think we're just going to flip sideways here for, I bet September, October. We're just not going to do anything. And that's kind of what seasonality is saying too. So I think we're hit a top, but we're not really going to go down much. I think the previous high comes around 608, 609 on the SPY. And I think we'll see that area at least once, maybe twice, maybe more. But it's not the time to be really long, and I don't think there's a big short here either. So it's just it's going to bore you to death, and people are becoming uninterested. But I do think another rally is coming that is probably as big as from the April low up to the July high, and I think that rally could start in October. So I think there's fuel to the upside. Previously, go ahead. I'm sorry.
No, I was going to say that perked my ears up, but then it got me anyway. Okay, well that's quite a move. I mean, I'm not sure if you were listening to Basil. He was on right before you. The weekly charts, just like you're talking about, the run was just so tremendous. There was almost no pullback. Basil works with peaks and pullbacks, and you're talking about a move on the S&Ps, and we know just a gigantic move, barely any pullback. Yeah, remarkable.
Yeah, so there's always a B-way somewhere. The market can't keep going straight up.
No.
It just needs to consolidate. You need fear to be able to build up here a little bit, too. And I think all that's going to come in between now and September, October. I hear the music.
Okay, folks, hang tight. We're going to come back with Tim. We'll talk a little bit of gold. And, yeah, that VIX was spiking on Monday. I was thinking of you yesterday, Tim, when that VIX was up above 17. The market clawed back all of its losses, and the VIX was staying elevated yesterday. And right now you're above 17. VIX at 1706. S&P's off 14. We're coming back with Tim. Don't go away, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We get the S&Ps off by 13. Market chopping around a bit. Right now, the session lows we had at about 1 o'clock as well, but S&Ps in the red and NASDAQ slightly in the green with NVIDIA plowing higher today. You jump over NVIDIA, up by 4% still at 170.51. We're talking to our man, Tim Ord, and we're going to talk a little bit of gold. All right, Tim, we got a little action today in gold. What are we looking at for gold, please?
All right, this is the XAU. I just want to keep pointing this out because I do some stuff on X and Twitter, and there's kind of rapid. They're starting to get a little rapid. There's kind of deniers out there that the rally's over. The rally's not over, but it is over on short term. But anyhow, this is a June close on the RSI for the XAU on the monthly time frame, and I want to. I keep pointing this out. Nobody believes it, but these are the times. This chart goes back to 1988 and shows all the times when the RSI closed above 70. And we did here again on June 30th. So it's extended to the upside. It's not like, we're in a bear market or anything. All the momentum's up. But I still bet we get a pullback on the XAU probably around 75, and we'll start going up again. Here's some more proof. This is the monthly GDX. If you look at the April, we got out in the April high about mid-April. Got around 50. Anyhow, if you get above 80% above the upper Bollinger Band on the monthly chart, which is basically in this vicinity right there, give or take, it was up around 52 on this case. And usually you're too far away from the average, because from the mid Bollinger Band to the upper Bollinger Band is 2 standard deviations. If you get 80% above that, it's about 3 standard deviations, and that's just too stretched. And usually the market comes back down and gets back to that upper Bollinger Band. And that's where we that's where we hit basically in June. But anyhow, this high in June tested the April high. If you notice, you had a big drop in volume. So you had a retest previous high on lighter volume. I think it was like a 20-30% drop in volume, and you closed above the previous high. Well, if you can't get above the previous high with volume, you try to take out the previous low with volume. That also happens to be the April low. It gives a target around 40. The weekly charts give around 45, but the monthly charts give a chart around 40. I've been saying for a while that at some point we're probably going to see 40. I do think we're going to see 40 probably sometime this year to get the next rally going up higher. We're not near of any top of any consequence other than this pullback. So it's around 50 to 40, so you're looking at 25% pullback. That's a normal pullback in a bull market, so it's nothing to fret about. But these are the big ones are going to pull back. Matter of fact, I think I got one here.
And if I can just say, Tim, because it's great information, and it does seem like, oh, man, that's a wild pullback, right? 51 to 40. And then, I'm looking at the charts as you're looking at them. And it's remarkable that the GDX was at $33 to almost kick off the year last year. So only pulling back to 40 from 33 in December up to 51, as in you have a little volatility. But yeah, you're talking about that would still be almost $6 and change up off the lows we had on that pullback into December, which is remarkable too. Yeah.
Yeah, so it's, you don't want markets to go straight up. If they go parabolic, that's the end of the move. And that's what happens at the very end. It's just onslaught of straight up, and then once that ends, the whole, the bull market's over. So you don't want that to happen here. You want basically bounce off some previous highs, try to take out some previous lows, and start the next uptrend. But there's a lot of stocks you just...
I was just saying, if it becomes irrational, eventually it's going to correct. Now, it might extend in terms of how long that takes, but yeah, that irrational kind of parabolic deal. Yeah.
Yeah, it gets parabolic. It's usually a bad omen. Here's another thing, too. This is a bullish percent index for the gold miners index. Bullish percent index measures the percent of stocks that are in point and figure buy signals. So basically, back in, June 5th of this year, anything above 95%, this hit 96.43. It's usually you get a consolidation. So this is a different indicator. Here we flip sideways, which I think we're probably going to do. Here we're going to kind of more or less flip sideways. The other ones were actually decent tops. But another indicator, nothing related to volume or price. It's just a bullish percent index, and it hit above 95%. So it's just going to take a rest. So anyhow, that's more evidence. And so let's get back here. This is AEM. It kind of looks like GDX in April. This is April high right here. If you notice, the volume is really big. And it tested that high in June and much lower volume. So you can't take out the previous high. I'll try to take out the previous low. Previous low looks like about 95. So that's probably where we're going. So the big ones, the big one's been, this started off in, 40 range, 40, 45 range, and ran to 125,
Wow.
So, at some point, you're going to have a B wave, and we're probably going into a B wave right now. So,
and I have to say, it's remarkable too. This company, folks, is a $60 billion company. So, it's not like it's $100 million junior miner, right? You just went from 45 to 125, and you're pushing that type. I mean, just tremendous value. Yeah.
Yeah. So anyhow, kind of the same thing. GDX, 8% above the Bollinger Band, which is probably up in this range. So close to 125. Keep kind of a signal. Then you got to test. So it's due for consolidation. That's the big one. So I'm kind of pointing out some small ones here that really haven't had their run yet. This is Doofus, or I can't quite, Dewey Band. It's a silver stock, and it's a monthly chart. And really, since 2016, it really hadn't done anything. It just went sideways, and that's a lot of cause. And I picked out these. You can't quite tell for sure, but this pattern here, this is a auto supply company, I think, or something like that. So it's not related to the gold market. But this next one is KEM, which kind of had a similar pattern, went sideways for years, and both of them had volume kind of like this. As the thing went sideways, volume increased. So I stock charts didn't allow me to put volume on both these charts. What this is similar patterns. Pattern identification. So that's what these are. So these are 3 unrelated stocks, all showing the same pattern. And once they broke out above the trend lines here, where I tried to do that, this one went from 17 up to about 30, give or take, somewhere up here in 30. It took, it looks like about 9 months to go. This one's just breaking out right now. I think it's probably going to go to, 50, 60 up in that vicinity. It's breaking out. You got a long base. The longer the base, normally the longer the rally. So if you got a base that's 2-3 weeks, you're not expecting a multi-year rally. But if you get a base of a multi-year rally, you're talking, minimum multi-month, if not a multi-year rally. Normally when you break above these areas, they go up to the previous high, which is around 8. And I think this one's breaking out right now.
DVS, those silver stocks, man, it would make sense. Silver's reacting well. They had quite a bid last week. Tim, I appreciate the education as always, man, and I look forward to talking to you on Thursday.
All right. Talk to you then. Thanks a lot.
Take care. Folks, check him out. Or at -oracle.com or right under the services tab. He's got 2 webinars, tremendous value. Check him out at TFNN. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&P off by 18 points right now. And boy, quite a reversal in yields. And yeah, we're breaking below the lows. We just traded down right now. Quite a bar coming into the close right now. And that bar is about to complete. We just did 20,000 contracts. You trade south. There was some selling there. And you got the NASDAQ up by just 58. And yeah, thanks, Z, for posting that one in the den. Those Dow. Basil talking about the Dow. And yeah, some of the biggest equities out there. Price-weighted index. How about Home Depot? $360 stock, down 2.7%. They're down $10 in share price alone. You got Goldman Sachs down $10 in share price. American Express down $9 in share price. AXP's down 2.8%. UNH down 2.8%. Man, the Dow's getting clobbered right now. Merck's down 2.5%. That's only an $80 equity. But yeah, Goldman Sachs is a $700 equity. If you're trading the Dow, Goldman Sachs, a dramatic impact on the Dow. We'll jump over to NVIDIA and the reversal of that. Yeah, look at NVIDIA trade higher. It's not stopping, man. And AMD, just with it, exactly. Up 6.66%. All right, and we'll finish it up with World Series Poker main event. There's 9 people left. And I'm always hopeful for the poker economy to grow. And this is a great way to do it. I hope that this woman wins. Why not? We need a woman to win the main event. There should be more women playing poker anyway. It's a game of mental skill, and for some reason, it's always interesting, right? And it's almost self-fulfilling. Once a bunch of guys start playing it, and realistically, I can understand it. And the casinos, being in casinos, I played a lot of poker online, but being in casinos, sometimes it's not around the best environment and the best people, just that are living in casinos, not poker players. But they're playing it down today, and they'll be playing for $10 million for the main event. And they're all coming back with a decent stack. It's anyone's game, man, for sure. $10 million, not bad for some poker. So about 2 weeks to end up playing. All right, markets continuing. We're at session lows right now. S&P is going to finish at session lows, off 20 points. Folks, thanks so much. Have a great one out there. Have a safe one out there. I'll see you back tomorrow morning, 9 o'clock for the morning market kickoff. See you then.
Building wealth